Today, it's another fine mess. Hello again, it's Martin North from Digital Finance Analytics, where I've noticed posts covering finance and property news. It's Friday evening, and Tarric is joining me. Hello, Tarric, how are you?
You're not too bad, mate. How are you?
I'm hanging in there. I'll tell you what, this week has been quite revolutionary in terms of trajectory change, and it's highlighting, I think, a few holes in things.
It is. I think we're really starting to see that divergence in outcome that you and I have been talking about for quite a while between, Australia, Europe, and the US in terms of the stickiness of inflation, and also just how the commentary on interest rates has just been way off, way off base. I mean, we've seen, the number of Fed cuts priced in for this year fall from something like four or five earlier in the year down to now we're talking about one or one and a half, depending on when exactly you've looked at the metrics last.
Well, it is interesting. I was looking at the US Fed funds rate, and at the start of the year, January, let's say it was at 2.91%. Today, it's at 5.38%. That's a really big change of trajectory. And I think the other observation I would have is that, of course, a lot of central banks are using market expectations of rates to feed into their forecasts. So essentially, there's a feedback loop that a lot of people don't understand, because essentially they're sort of saying, well, the market's saying that, so we'll plug that in and see what happens. A lot of the models that the central banks are using are pretty broken, I think. And in fact, Bernanke is releasing a report today in the UK about the way that the Bank of England is using their modelling. And I suspect he's going to be quite critical, because there are a few big questions that need to be answered.
I think a lot of the models are really broken. That's a point that the economist Warren Hogan made on Twitter, I believe it was yesterday, just basically saying that there are so many models and so many assumptions we have about inflation and about the economy that are still based on pre-COVID ideals. And we haven't updated them to understand the way the world has changed, but also the way politics has changed. I mean, you look at, say, like the US, they've gone from being a nation that, yes, they've had a deficit problem for the best part of the last almost 20 years now, but they've got a really big deficit problem. They've got like a bigger than Great Depression era size deficit problem in terms of GDP. And that's really quite concerning. But it's also something that feeds into higher inflation, rates higher for longer, and also just keeping the economy strong enough to keep it all sort of spinning in the background as, the Fed continues to tighten.
Yeah, well, higher for longer is now the question. And there were a couple of Fed speakers last week indicating, this was before the latest inflation data came out, suggesting that maybe they wouldn't be able to drop rates. And we also have a political factor with, of course, the US election coming into train as well. And, if you get to September and then they start messing around with rates from September through to the end of the year, then probably you could argue political rather than economic. So there is, I think, an interesting window of no activity, probably between September and January in any case. So it may well be that the Fed won't do anything until next year. Now, that, of course, has a profound impact, not least on the cost of borrowing, because, as you say, the amount of bonds being issued by governments around the place are very, very high, particularly in the US. The cost of borrowing continues to rise, which has a significant impact on government accounting and how they're going to pay for things. The tax take is as high as it's probably ever been in most Western countries. And yet things are coming unglued. And meanwhile, of course, a lot of households struggling with higher mortgages, more debt, and the wages that are there, the wage growth, isn't necessarily even keeping up with inflation if you measure it officially. And of course, the unofficial inflation number, which is the other bare bones question I always have, the real inflation number is a lot higher than the official number.
Well, it's interesting because in the last few days, we've seen a bit of a change in tack from the Fed following the inflation numbers. Not really, not so much directly, but through their favorite journalist at the Wall Street Journal, who they often who's sort of seen as a bit of a weather vane in terms of where the Fed's thinking is going. And, in the last few days, it's shifted to not just a case of when rate cuts are coming, but if they are coming,
Yep.
in this sort of immediately foreseeable future. So, the next sort of 6 or 12 months. And, Nick at the Wall Street Journal raising that question, I think, is a fairly significant shift from the dovish narrative that, once again, the same bloke was being, provided by the Fed even just a few months ago. It's shifted rather dramatically. And I think that that's something that's just somewhat misunderstood about this current situation. It really is still very much a line ball in terms of where things go from here. I mean, you're seeing things like one of Jerome Powell's favorite metrics, which is super core inflation, which is uh, services inflation, which is subtracting housing inflation. Now that bottomed last year in the late third quarter or the early fourth quarter. I forget exactly which, but it's been re-accelerating since then. And that's the complete opposite of what they really wanting to be seeing at the moment, particularly given the fact that, there is potentially, tariffs and trade wars and geopolitical things on the horizon that could really begin to impact goods inflation quite significantly.
Well, I chuckle how they are selective on which metric they go with. The supercore was meant to be the definitive better indicator. Oh, maybe it's not quite so good now. And then, of course, they've got their own metric, which will include the update on the producer prices that feeds into their metric. But wherever you look at it, whichever metric you actually pick up, you've got to say that inflation is not behaving the way that they were expecting it to. So that's the first point. The second point is, I think, again, you need to understand the political context here. At the beginning of the year, I'm pretty sure that Powell was thinking that from a political perspective, it would be rather neat to be able to actually at least have a couple of rate cuts, before the election period in the US. And of course, he was sort of quite, well, dovish, I guess, for the first 2 or 3 months. But as those bits of data came out and, the bumps in the road narrative started to come, well, maybe we'll just see the odd blip, but we're still traveling in roughly the same direction. I would say that those bumps have now got really big potholes. And there are now analysts suggesting that the next rate move could actually be up rather than down. And that's a very significant consequence. Plus, of course, the longer term bond yields, which are now knocking on 5% or potentially could be, has a huge impact not only in the US but other central banks. Because you could argue that central banks have some local autonomy with regard to short-term interest rates, but the longer-term interest rates are very much determined by the overall bond market, which is predominantly centered in and around the US. So in a way, what the US is now dealing with in terms of higher for longer is going to fall out into other places too. And in fact, there's some headlines this morning in the UK saying, well, the Bank of England is now not able to cut, as quickly as expected. There's an election probably later this year, maybe early next year, in the UK, and there was an expectations of tax cuts because the rate at which the governments would have to pay their borrowing would be down because interest rates were down. Well, that's just got blown out of the water. And I think also in Australia, the expectation must now be that rates are not coming down anytime soon. So this is a really, really important pivot point. And I think maybe we will start to see this impinging on stock markets now, which I think have been overvalued.
It's going to be interesting because one thing I find fascinating is that the Fed, there's going to be a Fed meeting the day after the election, which I think is going to be potentially a source of great hilarity if they end up moving in either direction following the election, because it would just sort of, put a nice bow on it for the fact that, they're trying so hard to avoid being political or to be political. We'll see. We'll see which one it ends up being. But on the topic of Australia, it's interesting. I mean, there was there was a headline in the AFR that the first fully priced rate cut is now in next year. It's now February.
Yep.
And not that long ago, it was August. So, there's been an absolutely huge shift of, basically 6 months down the road, and that could change again. And I think part of that, to be honest, is because of the ABS, because the jobs numbers are a mess. Because you can't reasonably expect to cut interest rates when the economy is apparently creating over 100,000 jobs in a month. It's just not really compatible. I mean, if you extrapolate that onto the US numbers, it's basically like the Fed turning around and cutting after the Bureau of Labor Statistics reported that they just gained over 1.3 million new jobs in a month. And that's not happening, is it? So the ABS has created an absolute mess in that regard. Now, there is numbers from the likes of Indeed, CBA, etc., who all point to a much, much weaker labor market. But that's not really something that the RBA can turn around and go, well, CBA or Indeed said this. No, they've got to listen to the party line from the ABS, and the ABS line is a train wreck at the moment in that regard. So, while I was someone who saw rate cuts potentially as early as June, any chance of that evaporated, unless, of course, we see an absolute train wreck in the other direction for the labor market. Any chance of that happening just went out the window because you can't cut rates when you apparently have a labor market that is, at least on paper, so very strong. Now, personally, I don't think it is that strong. I think unemployment's probably around about 4.1% at the moment. But at the end of the day, that's just my opinion, and my opinion doesn't carry that much weight with the RBA. Let me put it that way.
No, I'm not sure whether the ABS numbers actually has much weight. I mean, I keep worrying about the inflation numbers they report, and how they seem to be off, the employment numbers, etc., etc. So wherever you look, there's a little bit of let's say fluffiness in the data, which makes it quite hard. And then, of course, the question is: so how precisely does the RBA come up with its forecasts and estimates? As I said earlier on, a lot of it's driven off what the markets are saying in the first place. So there's a feedback loop there too. So the whole thing is a bit of a mess. And then the other point is, of course, they have these sort of fan charts, with levels of uncertainty as you go out, which, of course, are a bit of a cop out, really. I'm expecting Bernanke to criticize those. I'm also of the view that the dot plots in the US are not helpful either, because they just give you I feel like a bit of a false perspective at a particular point. So there is really no anchor point for a lot of this discussion, right? The other point I want to make is that there are three geopolitical things to think about. Right, there's an expectation potentially of a blow up in the Middle East, and that could happen, relatively soon. We've clearly got the Ukraine situation going pretty pear-shaped at the moment, with significant impact on energy in Ukraine itself, but also hitting gas storage facilities, some of which goes into Europe. So that could actually have an impact on not only the direct Ukraine-Russia situation, but the energy situation in Europe. And then, of course, you've got the nice little conversation between Japan, Australia, and the US with regard to the Asian region and China. So there are some big geopolitical factors in the mix too, and any one of those could actually kick off. And of course, I suppose if any of those really did kick off, then all bets are off, because suddenly markets could go anywhere you like. So there's a level of geopolitical uncertainty as well as the economic uncertainty.
There is, and I think one of the things that really needs to sort of be put into perspective is just how much relative geopolitical stability, globalization, and the proliferation of global trade has underpinned relatively low inflation since, probably the mid 90s in terms of goods. If you look back and you look at, say, US services inflation, for example, going all the way back to, say, let's call when it took off in, say, 1968, which is when, the US involvement in the Vietnam War really started to ramp up, and everything, and not, well, they started to run into some problems in terms of the cost of the war. Now that saw inflation take off, services inflation take off, and it didn't go back to below 2% for decades after that. Now, obviously, they didn't have the 2% target back then, but we do now. And between then and COVID, it only very, very briefly spent time below 2%, and that was following the global financial crisis. So the entire below or at 2% story of inflation, at least for the US, has been underpinned by cheap goods, by disinflation in goods relative to services, and quite significantly. So the question then becomes, if we see trade wars, if we see tariffs, I mean, you had US Treasury Secretary Janet Yellen going to China recently, saying basically to the Chinese, don't dump your overcapacity of goods into our economy, or we're going to have problems. And there's been a similar message out of Europe from both the EU Commission President and also the various EU representatives for trade. So, in my view, it's only a matter of time until that hits the goods disinflation or goods deflation impulse. Now, while China has this huge deflationary impulse currently going on in its manufacturing sector, and they want to export that and they want to basically keep more people employed, keep the economy ticking over, the West isn't going to accept that in industries that it views vital to their economic security. So it's only a matter of time, whether it's this year or next year, till we start to see the impact of tariffs and trade barriers pushing up inflation.
Absolutely. And I think the trade story and trade barriers is a very, very critical issue. And I do notice that there's been some attempt to, relocate chips production in different locations and what have you. But those are quite big and expensive decisions. And I think also in the middle of this, it's also worth just reflecting briefly on the Japan story, because of course Japan has now, well, just turned the corner on negative interest rates. The yen against the dollar has gone way off the scale, right? And they're trying to jawbone it back. But there's a significant flood of liquidity between Japan and the US that could actually start going a different way with what's happening in Japan. So again, another big factor in the international scene, which then has an impact on costs of goods and inflation and exchange rates more broadly. It's a mess, basically. Well, that's what the title said, so it must be true.
Yeah, pretty much, right? We should probably get into the charts, I think.
Let's do that.
Okay, folks, as usual, the charts will be available at avidcom.substack.com, and we'll get straight into it. Now, this one took me a long time to prepare because I didn't want to just go off some website that says it has the data for the various population growth and migration numbers, because frankly, a lot of them are garbage and a lot of them are wrong. So I went through the statistics data of every single government statistics agency in Western and Northern Europe to come up with this. Anyway, the long and short is that Australia's average level of migration and Western Europe and Northern Europe's average level of migration in 2019 are actually pretty similar. They're actually almost identical. Around about 0.44548%, somewhere in that sort of range, is relatively normal. It's was normal for Europe pre-Ukraine war, and it's was normal for Australia until immigration was ramped up just prior to the global financial crisis. Now, what I've done there in the rather fetching pink, which is relatively easy to see, is that's the European migration rate based on the latest data. Now, that includes the impact of all the refugees from Ukraine. Yet, despite the fact that that does include, in some cases, hundreds of thousands of refugees going to a single country, it's still lower than Australia's average migration rate was between 2007 and 2019. And if you look at where it is now, it's completely off the chart relative to the European level. So I think that just gives a little bit of perspective on the fact that, this whole idea that if you oppose Australia's current level of migration, you're insert thing here. We're more than 2x the level of Europe per capita. and they're dealing with a war on their doorstep, and we're not.
Yeah, that's a very telling chart, isn't it? And it's also worth just making the point that if you were to look at the rental growth inflection point, it absolutely maps to where that chart of yours takes off. It's exactly the same timing. So there's a direct correlation between a significant acceleration of migration, net migration, and rental demand and therefore rental prices. So there's a direct economic consequences in the economy. On the other side of it, of course, is that mass migration supports the GDP number because the total number goes up. But if you look at the GDP per capita, guess what? It also started to tank from that point.
Well, the thing is it's been basically like outcomes have been going nowhere, not nowhere, but practically nowhere for some age demographics now in terms of their real consumption since 2007, 2008. You know, like even the mining boom for some younger demos wasn't enough to rescue them from falling levels of consumption in aggregate. Now, that flies in the face of the whole idea of, you know, young people being irresponsible with their money and all this other stuff, because there's no data there to support it. Now, I'm sure that there are some young people who are quite irresponsible with their money, but I'm sure that there were members of Gen X and boomers and,
Oh,
you
yeah.
know, back in the days of, you know, Cicero in the Roman Forum, there was someone who was irresponsible with their money.
Spot on. Yeah, absolutely. And if you look at it carefully, and real wages growth, of course, if you adjust for inflation, is still below where it was a decade ago for most people. And I guess the other impost is the bigger cost of mortgages and the higher proportion of income going to service the mortgage because, well, prices have gone through the roof and incomes haven't followed. So there's a really, really important story there too.
Well, it's good. It's interesting you say that because that's something we got on the next slide. Now, what I did recently is I went through the data on how much it costs to build a new home from the ABS and also from the Urban Development Institute on how much the new median lot cost was. Now, I think it is worth noting here that there are some issues that would be slightly, well, potentially significantly understating this because this is based on the average cost for a new home in New South Wales, not in Sydney proper. So that could be distorting it lower. Also, the Urban Development Institute data is based on Greater Sydney, which at an ABS level encompasses parts of the Blue Mountains, the New South Wales Central Coast. So that could also be distorting the price lower, which is somewhat concerning considering what this points to. But I just thought would be, you know, just a bit of transparency about what it's actually showing. Now, historically, back in 2019, based on the settings of the day, so the settings of the cost of the land, the cost to construct, and the interest rate, you could buy the median, sorry, the average, or the average price new Sydney home based on a median block for about 130 on an income of about $130,000. Now that's based on you having 10% down and you've got spare cash for all the transaction costs, and this is at 30% of your income exactly. Today, you now need an income of $246,000. Now, not a lot of people are going to be buying homes based on those numbers, so that's a bit of an issue. So I thought, well, let's imagine that magically the numbers stay the same. And I will say that the numbers for 2024 are actually the numbers for the end of 2023. So it is what it is. So basically, this 2025 scenario assumes no further growth because I have no idea what the growth is going to be. And it assumes that rates are basically cut in half. Rates are cut by 2.1%. So that would be a cash rate of 2.25%. You still need a household income at that level of almost $200,000 to buy that median Sydney new house. And that's provided that this isn't distorted quite significantly by the issues that I mentioned before. Now, I think that this sets the property sector and the construction sector on a collision course in terms of politics, because the construction sector needs to be building. They need to be out there building new homes. It's a volume business. in aggregate. But the property sector wants property prices to stay high because that's their modus operandi, unsurprisingly. So at what point do we start to see, because right now the building sector is still burning through previous projects that came through during COVID. We're seeing completions of homes that were potentially started at, in some cases over 2 years ago. So, and not only that, but approvals in trend terms, well, they just keep falling. So the question is, even if rates are cut, how much is demand going to recover? And how much is that actually going to help the construction sector? Or have we done something stupid whereby we've capitalized all those lower rates into new home prices and now people can't afford them?
I would say we've done lots of things stupid, particularly around the property sector. A couple of observations. The first is, of course, that the average duration of a mortgage has gone up significantly in recent years. So I don't know whether that's reflected in your calculations and what you assumed
No.
in terms of the mortgage term. But the typical mortgage is now at least 5 years longer. And some banks are actually offering, up to 40 years. So that's one way of trying to extend the elastic. The other point, though, is interesting, and that is that if you actually do a bit of costing work on how much does it cost to build, let's say, a two-story adjoined property compared with building units, what you discover quite soon is that actually it's a lot more expensive to build up than it is to actually build just a two-story small place. And so a lot of the direction, which is to increase density and build up, is not actually necessarily reducing the unit price of the property that's actually being created at the end of the process. And so we are seeing the costs of individual units still rising dramatically. And even if you put an extra, let's say, 5 stories on a high rise, well, actually, you have to spend a lot more supporting it. And, there's costs involved. So, in fact, the myth of you can solve housing affordability by building up is actually also blown out of the water when you start looking at these numbers. So there's a fundamental problem between housing affordability and the building story. And of course, the building story is, well, we know we need more help from government. So I wouldn't be surprised to see more support coming through from the budget. Of course, we had the tax breaks for build to rent announced last week, which essentially means that it's going to be quite significantly tax advantageous for people to construct build to rent properties, assuming that they actually meet certain conditions. But the nexus is broken. And I can see no way that this is a circle that can be squared.
Well, that's the question, isn't it? How are we going to get back to the sort of level, the peak level of building work, which was, completions at about 220,000, and that was back in 2017, which doesn't sound like that long ago, but it actually is. And I think it's just going to be interesting just to see how exactly all this is managed. Because, you know, how do you address an issue like this when the cost of something has increased, its relative cost has increased by about 50%, and wages haven't risen by anything, or, even if you take a broader view of household incomes, haven't risen by anything like that. So, like I really do wonder if we've, somewhat just killed the golden goose here. And you make a very interesting point about the apartments versus houses thing, because at an aggregate level, if you look at the ABS data, apartments cost more per unit on average than freestanding houses do.
Yep.
Now, that's a rather stark, and in some cases, in some states, quite significantly more. So, despite the fact that they're presented as this affordable, sort of entrance into the market, then they're not really acting that way in terms of their sticker price cost. Now, obviously, the cost of land, it's in relative terms, is a lot lower. But are you seeing the benefit of that to a significant enough degree for it to make sense? And just just on a sort of relatively interesting little note here, I did a case study recently where I created a hypothetical couple who bought an apartment in Sydney in 2017, 2018. Right? Now I bought them the median apartment. They got help from the bank and mum and dad for the 20% deposit. They've been dutifully paying down their 30-year mortgage and trying to build equity to be able to buy a larger home for their family. Now, even if rates were cut, they're coming up hundreds and hundreds of thousands of dollars short of the borrowing power that they need to be able to buy a freestanding home. So I think it's really just worth noting that in a lot of cases these days, obviously this depends and varies wildly by locale, but for the people being told build equity in an apartment, it's not working out that way for people in certain locales.
Well, a couple of additional observations. The first is that the problem with apartment living is you end up with these services charges. And the services charges are rising significantly. Quite a few of the apartments have actually got defects, which means that the service charges are even bigger than you might have thought on day one. So the chances of building equity in an apartment is actually suspect. Secondly, if you look carefully at some of the high growth corridors, like North Ryde is the one I often come to, and look at the growth in the value of apartments over the last 4 or 5 years, there's almost no growth. And that's a consequence of poor quality of construction in the first place, a lot of supply, and limited demand. So I agree that there's a real problem with people essentially going into the apartment market on the assumption that we'll be able to actually ultimately grow enough value to be able to then jump up. The other observation, which I think is coming through quite strongly in some of my analysis, is that the builders are building down quality. So I was talking to someone the other day who's right in the middle of the construction industry. And he's saying, the costs of construction continue to rise. So there are two things that we can do. The first is we can try and actually lift the number of units in a footprint, but the marginal cost is actually a bit suspect because of the additional supports you need. The other is that the momentum that is created by this, in terms of it takes a lot longer to actually build apartments rather than a house. You have to go through more approvals. It takes a lot longer. And, until the apartments are pretty much complete, you can't actually sell any of them. So the lag time and lead time between agreeing to build a house versus an apartment is also shot to pieces. And that means that a lot of builders have to put a lot of money into the process. And the banks are very, very anti-lending for this at the moment, which again is why I believe that I expect to see some, mechanism by which the government will support the construction industry to allow them to sort of invest and to start. But at the end of the day, if in fact the owners, whether they're investors or owner occupiers, and by the way, a lot of first-time buyers have given up trying to find somewhere to live themselves, so they're still renting, but actually are trying to get on the property ladder by buying an investment apartment. Well, I think that's a really bad strategy at the moment. What it means is that the whole thing, again, is broken. And the long-term prospects here for people who are in the apartment sector are actually pretty dire, I think.
Yeah, it varies, quite significantly. Like you look at like Sydney and Melbourne, which is, obviously where a lot of these first home buyers are looking to get into the market because, the idea of just go out a little bit further, it doesn't really work as well in Sydney and Melbourne as it does in other locales where things are perhaps a bit cheaper for a freestanding house on the urban fringe. Like people, say in Brisbane, for example, they've done all right, but in places like, say, like Sydney, for example, over say like the last 7 years, in compounded terms, even wages have risen more than apartment prices. So I just think that in some ways it's just a bit of a mess, really, just in the sense that, you've got you've got people being polled. So they were polled by Westpac, and this was 3-4 years ago now. 77% of people want a freestanding house. But 77% of, say, new housing stock in Sydney is not freestanding houses. it's a much, there's a the proportion of apartments is much greater than what people saying they want implies. So, I think there's also sort of a societal and a psychological aspect to this too, in the sense that you've potentially got a scenario where people are stuck in these apartments that they don't want to be in, that they've outgrown, that they've got families, etc., etc. Or even they just want a property so they can have a dog or a cat or whatever, without having, strata or someone in another apartment whinging. You know, People being in situations that they don't want to be in the long term and being financially pressed into that situation is not a recipe for a happy society or a happy city. And, I mean, I can't help but think about, Chris Minns talking about, Sydney potentially being the city with no grandchildren. Well, it's like, duh, what do you think is going to happen?
Absolutely. I'll make one other point. Some of the migrants that are coming in are actually coming from parts of the world where they've been more used to living in small, high rise apartments. And so there is actually also a bifurcation here in terms of who's likely to buy. So I would argue that one of the reasons why the building and construction sector are still jawboning high migration is fine, folks, is because there's actually a market there from people coming in over from overseas who are willing and able to enter the deal, right? Whether it's a deal with the devil or not is an interesting question. But for a lot of Australians who actually have different aspirations, they're excluded from the property market because they either have to buy these very small rabbit hutches with poor quality construction and with little capital growth prospect, or they save and save and save and try and chase the small number of standalone properties that are available, or live way out where there's no infrastructure and spend way too much on getting about. So there is a really big societal issue here, as you say. And, no government, state or federal, wants to have this conversation. They're all talking about the solution bit of the argument, but they're just messing around the edge. They're not really cutting to the heart of the issue, in my view.
No, but I mean, the thing is, what do they say in politics? Never ask a question if you know you don't want the answer. And I feel like that sort of sums it up.
Absolutely does. And by the way, all this translates through to lower transaction volumes as well, doesn't it?
And that's our next slide. Now, it's worth noting that part of the reason why transaction volumes have been falling is what I like to call the Great Housing Lockdown. Basically, as the population ages and more people end up in, what could be considered their forever home, the proportion of housing stock being transacted upon continues to fall and fall and fall and fall. Now, I've done a bit of, very basic modeling based on some of the ABS forward population estimates, and it doesn't look good. Transaction volumes are going to keep falling at a structural level. Now, whether they can rise on a cyclical level is another story, but you can see there that compared with the early 2000s, transaction volumes have more than halved. And we're just going to quickly move on to the next slide. This is for Sydney. Transaction volumes in Sydney are absolutely glacial. They're now below 4%. So less than 4% of housing stock is turned over in any given year. If you were to just impose that across the forward estimates, it means that not every single house in Sydney would statistically be turned over a 25-year period. So when people say, "Oh well, what if there was a housing crash and prices fell and blah blah blah," what about all the people? The number of people who would sell while prices were depressed, even if you talk about a US level housing crash in a place like Sydney, considering the fact that volumes would be even further depressed, you're talking about at most 15% of homeowners, and most of them would have had enormous levels of equity anyway. So just a little interesting side note.
Oh, I think that's a very significant factor, and the bottom line is that the transaction throughput continues to go down, but it's not equally spread. If you look at some suburbs, there's quite high throughput, but in others there's almost no throughput. And in some suburbs there's not even one property or two properties on the market. So you're waiting for for somebody to die. Basically, that's about the only thing that releases property back. So this is a really really critical issue to understand, and I find it fascinating that the volumes of transactions continue to go sideways or down. That's having a significant impact on the real estate industry, who basically, they're having to work a bit harder to try and actually get sales. And that's one of the reasons why the spruiking has gone through the roof, because they're trying to drum up transactions wherever they can. The only thing that's saving the real estate sector at the moment is that the average price is still rising in some areas, and that helps to bolster their commissions. But again, it's another sign of a broken system and a broken market. And I think you make a really important point that going forward, it's not going to change. We're not going to suddenly see a massive flood of properties coming on the market over the next 5 to 10 to 15 years. So again, this is another indicator that this is a structural issue that we have here. This isn't just a little cyclical issue. This is fundamentally structural.
It is. And while we are going to see an increase in the number of properties coming on the market because someone is deceased, or because there is because someone has, moved into care or whatever, if you actually look at the numbers and the proportion of properties owned by over 55s and over 65s, people who have got their forever home, people who are statistically, and this is also something that the New South Wales government's looked into. Their survey data shows that once you've been in a property for X number of years, the chances of you moving basically goes down to being not quite non-existent, but extremely small. So that cohort is going to get larger and larger and larger and larger, to the point where, say, over 55s are going to own well over half of all housing stock. So you've got this rump of housing stock that's just basically, in most cases, not going to be transacted upon. Now, that's an absolute mess. But I think it's just so insanely ironic. And if this was looking at someone else in like a sort of yes minister sort of country situation, it would be really, really funny. But I think it's just really ironic in the sense that we are bringing in more migrants, right, to fix our demographic issues, while ignoring an enormous demographic issue that there's not going to be enough housing coming on the market to adequately house everyone and to meet everyone's individual needs and requirements. That just boggles my mind that the connection hasn't been made and public policy hasn't been adjusted accordingly.
I agree with that. And of course, that's one reason why tent cities are expanding. It's remarkable to see them because people have no choice. And, talking about policy, of course, they did change the incentive for people to downsize over a certain age and allow them to put a certain proportion of that capital into superannuation. But it's still a marginal impact. And my surveys suggest there's about 1.2 million people in the downsizing area who potentially are interested in getting something smaller, but they can't find anything that actually is of interest. So there's no way that they're going to move because the supply of the sorts of properties that they want to live in are just not being made available. So the bottom line is it's broken.
Exactly. And that is one thing that drives me up the wall when it comes to the discussion about apartments in Australia. Now, I've lived in apartments overseas. I've lived in townhouses overseas. They were great. They were fantastic. The build quality was excellent. I couldn't hear jack from the people next door. Even if people, were listening to, Bayern Munich having a cup game, it didn't matter. It was all good, But it's just here in Australia, we don't build the kind of apartments that people need. If you want to say, for example, you're someone who's a bit older, you want to downsize, but you still want a bit of space. You want something, say, like a nice 3-bedroom apartment. So when the grandkids come over, you've got a bit of room. You can still got a little bit of an office for the bedroom. Maybe you use it to sew or to do crafts or whatever it is that you want to do. You just don't want to do it in the lounge room, and that's fair enough. But are we building those kinds of apartments? Well, we're building some. Are they affordable? Nope. Not in most cases. A three-bedroom apartment in a lot of cases is just as expensive as a rundown three-bedroom house. So the incentive to downsize isn't really there. And this is a conversation I've had with family members and friends who are in that age demographic. I talk to them, I go, well, do you want to downsize? And they go, yeah, I don't want to have to maintain all of this. This is way too big for me. I mean, I know one guy who lives in a five-bedroom house by himself, you know, but he's like, I want to downsize, but is there any point? He's like, if I downsize into, like a decent sized townhouse, I don't know, he's like, I don't really end up with much change. So what's the point? He's like, I'm better off just, leaving it. And then he's like, I don't know, maybe I'll go overseas, maybe I'll sell it and just, move to Asia, move to Eastern Europe, somewhere nice by the water, and it doesn't make sense to me that we have this conversation of, okay, you want people to live in apartments. Cool. Are you going to build the kind of apartments that people want to live in, with families and the things that people are going to be forced to live in, whether they want to or not? Nope. It just boggles the mind. But that's Australia.
Well, it just shows you that a lot of people who are in positions of policy don't really understand what's going on. And I think they're over lobbied by the construction sector. And they're also, of course, worried about the election cycle and, trying to be seen to be doing things. So these first owner grants and what have you, we're helping people get into the property market. Yeah, but you're not actually tackling the root cause issues. And the longer it goes on, the more difficult it becomes. And it's almost unsolvable, in my view, at the moment, unless you turn the migration knob right down close to zero for a bit to be able to let things catch up. And unless you reconsider the whole question of what are we building and where we're building. And, I'm not sure you can let the market be the free market. But on the other hand, I would argue that we haven't had a free market in property for at least 20 to 30 years in any case. And look at what that's done for us.
There's a three-word phrase in the world of programmers and game developers. And I think it applies to the construction sector in terms of what we're building and what we're not building and what we should be building. It's a simple phrase: working as intended. And it is, because there are people buying into, two-bedroom apartments, people with, one, two, three kids, can't afford anything else. People who have done their best, people who have full-time jobs, people who are on, 110, 120, 130% of the median household income, people who would have been easily able to afford the median house very, very comfortably in the late 90s and 2000, who could have a very, very nice, very comfortable life in another era, who today are forced to live in something in set of circumstances they don't want to live in. Now, I just want to just clarify something. If you want to live in an apartment, that's great. More power to you. I don't think that there's anything wrong with apartment living under different circumstances in a different country where there's different levels of quality. Yeah, I'd probably be down for it. But I think it's just important that people be given the right to choose. And if they're not going to be given the right to choose to the same degree that their parents were, because let's be honest, that's already happened. Be honest about it. Policymakers, get up there, talk to that camera, and tell people this is the sort of life you can expect. This is the sort of home you can expect. And be honest and tell people the truth. Because if you don't tell people the truth, they're going to find out anyway. And there's going to be more years down. There's going to be less years to fix it. And there's going to be a lot of pissed off people.
Yeah, you want the truth? I'm not sure you can stand the truth, springs to mind, right? and I'll just tell you, when I first moved to Australia, we moved into an apartment actually in Kirribilli. And I have never, ever experienced so much noise from other apartments close by, kids crying and the lift and everything else. I mean, the quality of the construction was appalling. The insulation was appalling, so that effectively I've never been so cold in the winter I've ever been in Australia. And so my decision quite quickly was, we're never, ever going to go near an apartment in Australia because the quality of construction is so poor and the quality of life is so diminished. And it's more of the same, I'm afraid. And, all of this preaching of, well, we'll just increase density and build high is misplaced.
I just find it really ironic because I go to friends' houses and stuff like that, and you hear people beating around upstairs, or you hear people through the wall. And I remember a while ago, this was before COVID. I was at a friend's apartment in in Asia, and they said, and the next door neighbor, we saw the next door neighbor, and they said, I'm really sorry about my 3-year-old. She was having a really bad time and blah blah blah. And we're just like, we didn't hear anything. We didn't hear anything at all. Although, in fairness, the walls are a foot of concrete. You know, you're not going to hear anything. So, I mean, okay, if we're going to do it, fine, but let's do it properly.
Yeah.
I mean, this is Australia. We're meant to have quality here. This is meant to be a sort of part of the Western world. But when it comes to our apartments, just somehow we just fall behind, and it's just like we can do better. But
Absolutely.
working as intended.
We should and could do better. But your point is absolutely right. This is deliberate. This is intentional, right? And that's the biggest sin of all.
Yeah. I should probably get on to the next slide rather than ranting. Okay, now this is a nice illustration of what I was talking about earlier in terms of the fact that CBA sees things very, very differently to the ABS in terms of employment. In terms of the number of salary payments actually hitting people's accounts, that has continued to fall and fall quite significantly since the turn of the new year. Whereas the ABS says no, number go up. So yeah, it's kind of hard to square that particular circle.
Yeah, absolutely. Well, we've said for some time that the ABS numbers on the employment are way off, and there's all sorts of reasons we've touched on before. So I would suggest that the data I'm seeing in my surveys is closer to what the CBA is saying rather than what the ABS is saying. I'll just leave it at that.
Well, it's good. It's good to know. It's always good to have another data point.
Yeah.
Okay, now a source of annoyance. Now, the Albanese government is talking about extending. Well, they're not just talking about it. They've made it fairly clear that they're going to extend the electricity subsidies into the next financial year. Now, well, why would they do that, you say? After all, wholesale the cost of electricity is coming down, admittedly only by very, very small single-digit percentages in aggregate, but it's coming down. Shouldn't we just let things, let the market be the market and just let things play out organically rather than throwing taxpayer money at it? No, because that would add somewhere between 0.2 and 0.3% of headline CPI to the CPI number solely through electricity. And Albo doesn't want that. No politician wants that to occur on their watch. So you get more subsidies, you get more subsidies, you get more subsidies, and we all get another year of a distorted CPI because reasons.
Yeah, and of course, where does that money come from? It comes from taxpayers. Why are taxes so high? And why are the bands actually frozen? So effectively, more people are being sucked into the tax system and more people are paying a greater proportion of tax so that Albo can spread the joy and keep the inflation number a little lower into an election.
Yeah, basically. Yeah, exactly, because these subsidies will still be in place when we get the last CPI reading before the next election. Isn't that wonderful? And
Magic.
Yeah. I mean, that's something that really just concerns me and just bothers me about the way that politics is evolving, because it's got to the point now where instead of just letting central banks do their job or even encouraging them to do their job, as we saw previously, so like when Keating was involved in the piece, we're now seeing them them deliberate, not necessarily deliberately, but distorting things.
Yeah.
And the ironic thing is that if they didn't do the whole electricity subsidy thing, we could have taken the medicine, and by the Q3 2024 CPI data, it would have been over. But instead, we've postponed it, and we're postponing it some more. And then, well, if Albo finds a way to lose the next election, it's going to be the next guy's problem.
Yeah, and just to underscore that this is because of the base effects, right? Because if you keep the
Yes.
inflation number down, that sits in the numbers for a certain number of months, but then it disappears, and then the number goes up dramatically. And that's the problem they've now created with some of these interventions. And there are a few others in the system as well. I mean, we saw the same with some of the childcare costs earlier on, which actually kept the inflation number down for a little bit, but then shot back up when that was taken away. So, yeah, you're just postponing the inevitable. I suppose they're kicking it through, as you say, beyond the election date.
Well, the thing as well is it's just worth noting that even at a state level, while they're obviously much smaller programs, the various childcare, preschool programs that are, either lowering costs, subsidizing, or even in some cases making it outright free, those have also distorted the CPI lower. Now, I don't think that that was the intention in those particular cases, but I think it's just worth noting that it is occurring. So, yeah, I mean, it's all well and good. I mean, it's also even just while we're on the topic of the CPI, the things that are currently suppressing the CPI are not going to be in there forever, as you say, because of, base effects eventually run their course. Say for example, we've seen big falls in the cost of holiday travel in the monthly CPI so far. Things don't fall at 9% or 11% forever.
Yeah.
They do it once, they do it maybe twice, because generally speaking, things falling that much tend to be, disastrous. But yeah, it's just something that it's one of the reasons I'm not fond of this whole thing of let's annualize it. Let's take 2 months of data and annualize it. It's like, do you have any idea how seasonal this is? And also the fact that the ABS says that it's not even completely updated every month anyway. But no, no, let's annualize it. Let's ignore the fact that there are even components that are only updated once a year. But let's just ignore all those things.
Yeah, a brief rant on analyzing. Of course, the US are the experts at analyzing bits of the numbers, right? If you analyze the last 3 months, inflation would be even higher. So suddenly they've stopped doing it.
You gotta love it, don't you? It's just like, does annualizing make things look better? Yes. All right. Well, we're gonna run with that. Does it make it look shitloads worse? Yes. All right. Well, we need to figure out what other things we could strip out of inflation to make it look not bad.
Yeah, exactly. Engineered numbers. And talking of engineered numbers, I have to say that the Tasmanian election results were quite interesting, but not for the reason that perhaps we might think. The major parties took a bath, didn't they, really?
They did, and I'm loving the segues. Now, before we get into the chart itself, I just want to give a little bit of perspective. As of not the last Tasmanian election, but the one prior, just the one prior to COVID, the share of the vote going to the Liberal and Labor parties was actually it was actually the highest of all the states. They were getting a larger share of the first preference votes than anywhere else. Now, I think that's quite telling because, there's this idea that, Tasmania's fringe and blah, 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 blah. And to a degree, okay, yeah, sure. But I think that they're an interesting bellwether in this regard because they're not any more so than anywhere else in the country has been during other points. But this is the weakest two-party result for the states since, at the very least, the mid 1980s. That's as far as I've had a chance to go back so far, but that's at least 40 years. And considering the fact that the two-party duopoly has been pretty strong for most of that period, it wouldn't surprise me if it extends back significantly further. But they've fallen to under 2/3 of first preference votes. And I think that we're going to continue to see that resurgence in, well, technically it is a resurgence if you go back far enough, the resurgence in the third party vote because people are pissed off. People have had it. that people feel like they're not being listened to, that their concerns aren't being addressed, and they're looking to other people who will listen. And in the Tasmanian election, it was independents and it was Jackie Lambie, and at a federal level, who knows? Maybe it'll be somebody else.
Well, I do think it's interesting that the Greens have really been pushing the rental sector conversation very hard. I think there is purpose behind that because they believe that there's a segment of the population that's not really being serviced by the major parties. All the other surveys are suggesting that less and less people are actually listening to either of the main parties in terms of what they're saying. And in fact, many people think they've got closer and closer together. There's almost, to quote somebody from the UK, a recent politician who got re-elected, there's two cheeks of the same bum.
Yeah, it's a bit of a mess, really. And well, like we keep saying that. But it's just funny that just in the sense that there's not really a plan to address any of the major issues between them.
Yeah.
And that's profoundly sad. Like, you'd think that there's at least sort of, some radical thing from the opposition that they're going to introduce, that they want to make things better, or, they've got a ready-made different vision of Australia that's not just ideological. That's not just we're going to run things different. That's actually got some practical policies attached to it.
Oh, well, small modular reactors. There you go. Problem solved.
Oh god. Yeah. I you know, it's kind of astounding how crap of an opposition leader Peter Dutton is. Like, Tony Abbott is in a different galaxy, and that's saying something. And like, and I just think and then on the other hand, it's in some polls, Dutton is winning. Dutton is winning. It's like you guys have found a way to screw this up. And I just, it's just kind of amazing to me because, I mean, as someone I wouldn't call myself apolitical, but just not politically aligned, it's just disheartening to just see, the country basically run in such a partisan and schoolyard way.
Yeah.
Of just, well,
I was
go.
going to say, the last two announceables were quite interesting, right, from the current government. The first one on the migration strategy document. I don't know whether you saw that migration strategy document. There was no content to it at all, right? It was just literally fluff and bluster, really. And then, of course, we had Albo's Australian manufacturing speech this week, which is, again, fluff and bluster. There was no content to it, but it was an announceable. That's all you need.
Just while we're on the topic of the immigration issue with Albo,
Mm.
I'm not going to get annoyed. Back in September of 2022, Albo ordered a review of the immigration system because so many people, yourself, Edwin, basically every man and his dog as well, had basically said this is broken. There are issues with it. It's being abused. People are being exploited. And this is not a fringe view. This is something that is, that has come through the courts. It's come through academia. It's come through a whole bunch of different places. The courts have said, the circumstances people are in Australia under the current system are causing, basically, conditions are rife for exploitation. Now, Albo commissioned that in September 2022. It was delivered to Albo, and if you look at the nice little paper where it says Department of Home Affairs in March 2023, and then Albo sat on the paper for almost 9 months, and then got his announceables going, and said, "Well, we're gonna reform the immigration system." Everyone knew it was broken before the election. Everyone knew that it's been broken for a long, long time. So you got the report that says this is broken, and then you sat on it and did nothing for 9 months, while basically everything got increasingly more challenging for the average Australian and for the average migrant who's coming in here. And I think that's one of the forgotten things in all of this. It's all well and good to say, well, if you don't like the current level of migration, you're racist. It's like, what level of quality of life do you think people are currently being welcomed into in this country? if you think it's hard, if you think that they're if you reflect on the fact that there is people with full-time jobs who are living in cars, who are living in emergency accommodation, people who should otherwise easily be in at least a small unit of their own. How is that for someone who's just arrived on a plane, who's going to university or is a skilled migrant or whatever? It just, it's like, doesn't their welfare matter, or is this all just ideological? And I say that as the grandson of an international student.
Yeah, well, it's partly ideological, but it's also partly just numbers, right? So we're trying to keep the GDP above, and of course, bring more people in, keep GDP high, never mind per capita measures. And it is really very frustrating. And that document that I mentioned in the migration document, there's nothing concrete in there at all. It's just a sort of a waffle. And also, of course, Albo argued the other day on an ABC interview, I think it was, that the migration numbers are just catch up because of the dip that we had through COVID. So that's the reason why we can have big migration at the moment. So again, I'm a bit skeptical of that particular argument.
Well, I mean, I shared a graph on Twitter a few months ago, that got quite a bit of a showing, and it showed that if you actually chart long term uh the long term working age population, so people aged 15 years and over, and you chart that from 2017 all the way through to the present, we're well above the pre-COVID trend. But I think it's all well and good to say, well, there's fewer people. It's like, yes, because people are having fewer children because things are such a mess. You know,
Exactly.
like there's
Yeah.
tens of thousands of less little Aussie kids running around at the moment because of that.
Yep.
And that should be factored into the calculus.
No, indeed. I noticed we're running way over, but you just had a couple of charts on the US inflation. We might just quickly touch on those because it's so critical.
Yes, we shall. Okay. Uh, this is of the aforementioned supercore inflation, which is basically services inflation minus housing. And as you can see that it basically bottomed out in about October last year and has since just accelerated, it continued to accelerate away. Now, it's all well and good for people to say, well, it's only about housing, but I think this shows that it's not just all about housing. And, if the continued goods deflation impulse does not continue, it's going to make things even more challenging. So, yeah, and I think we should just to finish up on this is of the number of implied rate cuts excuse me, for the rest of 2024. And basically it just shows that over the last few months, it's gone from basically rate cuts, it's going to rain rate cuts to, well, we'll see.
Yeah. Now that's a very important chart because it's really just showing the expectation dropping and dropping and dropping and dropping. The markets are always trying to be ahead of the curve. And my argument would be that with the expectations that we're seeing now, any rate cut through this year is now to be questioned, particularly when you think of where the US election is going to sit. So I think that rates are for longer, more chaos, more difficulty. And as we keep coming back to, I guess, the end of the story is that there's a lot of chaos out there, a lot of difficulty. It's a fine mess, as we said at the start of the show.
It is, and I think the thing is that life is messy. Life is chaos. It always is, always will be. It's just the
Mm.
nature of the universe, Even if you look out there in the great wide galaxy, the great wide universe, there's all sorts of, chaotic stuff happening. And, even at the level of, entire star systems. But I think, just as we sort of close out this show, life is messy and chaotic. But we don't need politicians making it any more messy and chaotic than it already needs to be.
No, they should be part of the solution, not part of the problem, right? And
Exactly.
frankly, over the last 20 years, because of the power part, the power and politics and the influence of large corporates and all sorts of other things, and the fact of lack of vision and trying to get through to the next election cycle, all of those factors have meant they've messed and meddled and stuffed things up for ordinary people. And there's no accountability for that, by the way, because both sides of politics are playing by the same rules. But it's coming to a significant nexus point, and I think it'll be interesting to see, particularly the next election, as to whether people will really start saying, hang on, we've got to find a different way. Because let's face it, what's happened over the last 20 years has led to a very, very unfortunate point so far.
Yeah, I think that pretty much sums it up. I think the thing is that we've gone from a system of, very much a faith-based system, where people believed that politicians were working for them, to one where people, if you look at, say, like the Australian National University election study, where people no longer believe that. An overwhelming majority of people believe that the politicians are out for themselves. And I think the truth is that the the Australian electorate, sorry, the Australian elections, I should say, have been ripe for a third party or a third party candidate to sort of swoop in and just say, and just not even necessarily fix issues, but at least speak to those issues, speak to people and just say, look, this is what the government is working towards on your behalf. Do you agree with that? Are you happy with their agenda of not their claimed agenda, but of what they are actually achieving in your name? And if you're not, vote for me.
Yeah, I think this is going to be really, really an important conversation to be had in the months ahead as we come up to the next election, because you're right. Maybe the democratic process will ultimately swing back to support other players who might have more to say. But of course, the question is, are there those players out there? Are they credible? And do they have anything like a plan B? Because I think we need a plan B at the moment.
Yeah, well, I mean, I think the thing is that and in some ways, it doesn't really matter whether it's credible or not. I mean, if they're credible candidates in terms of, personality wise, and they're not like a complete train wreck, like some of the things we've seen in recent times, it doesn't really matter if the plan's credible or not. I mean, we've seen that with the Greens. Like, some of their plans don't really survive contact with reality, but it doesn't really matter because people don't, most people don't have the deep level of understanding that's required to know why they won't work. They just hear it and they go, well, that sounds pretty good.
Yeah.
And that's understandable. I
Yeah.
mean, not everyone can dedicate the kind of time that you need to understand all that stuff at that level. So, if you do get like an appealing, third party candidate, someone who does have that charisma but doesn't have the skeletons in the closet, then yeah, I mean, I think they could really do quite well. And because I mean, I think that really, I mean, even if you just look at party membership numbers, the two party duopoly is slowly evaporating, and really demographics is killing both. Sorry, aging demographics is slowly killing both of them.
Absolutely. Well, we're going to watch this space and continue to chat about this through the year. We always find plenty to talk about. We've run over massively, but I really think it was worth it. Tarric, I want to say thank you for all the research and the charts. And I look forward to picking up with you again down the track. And we'll keep telling it as it is, eh?
Yeah, well, we can't do any different, mate. That's what we're made for.
Exactly right. Take care. We'll see you soon. Cheers.
No worries, mate. Bye.